Somnigroup just posted a pretty mixed Q2 2026. We are looking at a narrow EPS beat, but a top-line revenue miss. Revenue came in at $1.82 billion, which misses the $1.88 billion consensus. But adjusted EPS was 0.52 cents, so that narrowly beat the $1.57 estimate.
Right. In the street, they really did not like what came next. Management actually revised full year 2026 adjusted EPS guidance down to a range of $2.85 to $3.15.
Wow.
Yeah, and that midpoint completely trails the $3.15 street consensus. So consequently, the stock just dropped nearly 4% in pre-market trading.
Well, today we're doing a deep dive into Somnigroup's latest earnings deck and, management commentary to figure out exactly what is going on under the hood here. Because unpacking this divergence between falling revenue and rising earnings, I have to ask, how does the math work?
It is a bit counterintuitive.
Right. I mean, if top-line sales are shrinking, how did Tempur-Pedic Sealy North America manage to expand its gross margin by a massive 680 basis points? Hitting 61.8% is just, you don't usually see margins jump like that when revenue is actually falling.
No, you really don't.
Yeah.
But North America achieved this through, well, basically aggressive operational synergies and some serious supply chain efficiencies. They were ruthlessly squeezing more out of less.
So renegotiating contracts and consolidating facilities, that sort of thing.
Exactly. But, and this is a pretty massive but, the mattress firm segment really dragged the overall performance down.
Yeah, I saw that.
Yeah, its gross margin fell 240 basis points to 33.3%. And that was heavily pressured by higher consumer financing costs and, just negative product mix shifts.
Right, because when interest rates stay elevated, offering that promotional 0% APR financing gets incredibly expensive for the retailer to subsidize.
Right. It absolutely eats into margins.
And budget buyers are probably trading down to cheaper options, right? But wait, wasn't this retail margin squeeze also happening internationally? I noticed their UK Dreams business faced some heavy margin pressure too.
Oh yeah, the UK side took a hit, but that was exacerbated by a really disruptive ERP system implementation.
Ugh. Enterprise resource planning rollouts are always so painful.
They are. The software rollout hit major snags, and that just totally disrupted their operations. So you take an already tough macro environment and add a botched software launch, it's a mess.
That sounds like a total logistical nightmare, which, that connects directly to the consumer environment management highlighted. They described this as a K-shaped market, which is so interesting.
Yeah, it really stood out.
It's like the auto industry right now, honestly. You've got luxury buyers who just aren't flinching at premium prices, but the budget buyers are, completely paralyzed.
That analogy is spot on. Management highlighted some severe risks there. The broader U.S. bedding market is actually declining at a mid to high single-digit rate right now.
Wow, mid to high single digits.
Yeah, the entry-level bedding tier is just under severe pressure. And that trend was worsened by a notably weak July 4th promotional period.
Which is usually a massive driver for mattresses.
Exactly. Add to that a surprise $10 million commodity inflation headwind, and, well, you see why guidance was cut.
So shrinking market, budget buyers striking, botched UK software, and inflation. But there were some bright spots to balance this out, right? We shouldn't write off the whole quarter.
No, definitely not. They had a record operating cash flow of $236 million.
Okay, that is serious liquidity.
Yeah, and debt leverage returned to a very healthy 2.99x. Plus, the $2.5 billion Leggett & Platt acquisition is still perfectly on track to close in Q3.
Which leaves you with a really fascinating strategic question to ponder as we wrap up today's deep dive. As Somnigroup absorbs Leggett & Platt to vertically integrate, will owning the underlying component manufacturing actually insulate them from future commodity shocks?
Or does it just add heavy operational complexity right in the middle of a stagnant consumer cycle?
Exactly. It's the multi-billion-dollar question for their valuation.
It is. Well, be sure to follow the show for our daily earnings coverage so you never miss how these market dynamics play out.